One of Japan's largest financial powerhouses just made a move that tells you a lot about where global finance is heading. SBI Holdings has partnered with the Solana Foundation to build an on-chain financial market originating in Japan. And this is not one of those vague, we signed a memorandum and shook hands kind of announcements. There is real structure here, real institutions, and a real strategy behind it. So let us break down exactly what was announced, what it actually means, what happens next, and the big question a lot of you are already asking. Is this just a Solana thing, or is it the start of something much bigger? Let us start with the facts, because accuracy matters here. On July 13th, 2026, SBI Holdings and the Solana Foundation announced a strategic partnership. The structure is the interesting part. There is an existing company called SBI R3 Japan, and the Solana Foundation is taking an equity stake in it. That company is being renamed SBI Solana Global. Now pay attention to who already sits at that table, because it is not just SBI. The other major shareholder is Sumitomo Mitsui Financial Group, which is one of Japan's 3 largest banking groups and one of the most systemically important banks in the entire world. So you have a giant financial conglomerate, a top-tier global bank, and a major public blockchain foundation, all now aligned inside one company. Before we go further, let us make sure we understand the core concept, because this is the education piece. What is an on-chain financial market? In traditional finance, when a financial asset is created, bought, sold, and finally settled, that process runs through a web of banks, clearinghouses, and intermediaries, and it can take days. On-chain finance means the issuance, distribution, and settlement of those assets all happen directly on a blockchain network. The goal is to make the whole thing faster, cheaper, and available around the clock. SBI is essentially describing this as the next generation of financial infrastructure, and it is betting that Japan can be a leader in building it. So what is this new venture actually going to do? Based on the announcement, it is focused on several areas. First, distributing yen-backed stablecoins, including SBI's own regulated stablecoin. Second, the tokenization of real-world assets, meaning putting things like corporate bonds, commercial paper, investment funds, and even real estate onto the blockchain. Third, building cross-border payment and settlement infrastructure. Fourth, offering on-chain financial services aimed at big institutional investors. And fifth, and this one is forward-looking, creating payment rails for transactions between autonomous artificial intelligence agents. Taken together, this is not a single product. It is an attempt to build an entire market. Now, why does this matter, and why Solana specifically? A huge part of the answer is Japan's regulatory environment. Japan already has one of the more established legal frameworks in the world for stablecoins and for tokenized securities. That regulatory clarity is exactly what large, cautious institutions need before they will commit serious capital. This announcement also builds directly on recent momentum. Just last month, in June of 2026, SBI Group helped launch a trust-backed yen stablecoin, one of the first of its kind in the country. As for Solana, SBI pointed to its high speed and low transaction costs as the reason it is suited to power financial applications that need fast, efficient settlement. In plain terms, they wanted a network that could handle serious volume without serious friction. So here is my read on all of this, my honest take. The single most important detail is that the Solana Foundation is not simply being chosen as a vendor. It is taking an ownership stake in the venture. That is a meaningful signal because it aligns both sides for the long term rather than for a one-off project. When you combine that with the presence of a globally systemic bank, this stops looking like a crypto experiment and starts looking like traditional finance deliberately building on public blockchain rails. That is the real story. For years, the narrative was that big banks would only ever use their own private, closed blockchains. This is a notable example of a major institution instead reaching for a public network that anyone can access. But let us stay balanced, because good analysis means noting what we do not yet know. Several critical details were not disclosed. We do not know the size of the Solana Foundation's equity stake. We do not have firm launch dates for individual products, and we do not have revenue expectations for the venture. Announcements like this are a statement of intent, and intent still has to survive the hard work of execution, regulation, and real-world adoption. So it is genuinely promising, but it is a starting line, not a finish line. Now, to the question a lot of you are asking, is this just Solana, or will other crypto projects land partnerships like this too? Here's the factual context. SBI has a long history of working across multiple blockchains, not just one. In fact, this very company started life connected to enterprise blockchain technology from a different provider entirely, and SBI has separately maintained a well-known multi-year relationship with Ripple and its work on cross-border payments. So SBI itself is not putting all of its eggs in one basket. It has consistently been what you might call chain agnostic, willing to work with whichever network fits the job. Zoom out further, and the pattern becomes clear. This partnership is one piece of a much larger movement of traditional finance moving on-chain. Around the world, major banks and asset managers are experimenting with tokenization, stablecoins, and blockchain settlement across a whole range of networks. So the honest answer is this: it is very unlikely to be only Solana. What we are almost certainly watching is the early phase of a broader competition where different blockchains court different institutions, and big players like SBI hedge their bets across several of them. Solana landing a deal of this caliber is a significant win for its ecosystem, but it would be a mistake to assume it will be the only chain that traditional finance ever chooses. So what should you actually watch from here? A few things. First, look for those missing details to be filled in: the stake size, the timelines, and the first actual products to launch. Second, watch whether this venture truly expands beyond Japan into the rest of Asia and then globally, which is the stated ambition. And third, keep an eye on whether other major banks and financial groups announce their own on-chain partnerships in the months ahead, because that will tell you whether this is a one-off or the front edge of a wave. Let us bring it together. What SBI and the Solana Foundation announced is more than a headline. It is a serious, structurally committed effort to merge one of the world's most sophisticated financial systems with public blockchain infrastructure. Whether it fully delivers is still an open question, but the direction of travel could not be clearer. The walls between traditional finance and the on-chain world are coming down, and Japan just planted a very visible flag. Quick and important reminder: everything in this video is for educational purposes only. It is not financial advice, and it is not a recommendation to buy or sell anything. Always do your own research and consider speaking with a licensed financial professional before making any decisions. If this breakdown helped you understand the bigger picture, hit that like button. It really does help the channel grow. Subscribe to Pisano Finance for clear, no-hype breakdowns of the stories shaping the future of money and finance. And I want to hear from you in the comments. Do you think public blockchains like this will become the backbone of traditional finance, or will the big banks ultimately keep control with their own private networks? Let me know where you stand. Thanks for watching, and I will see you in the next one.